In a world where economic landscapes are ever evolving, understanding national and economic issues is important because they can affect your finances. Things like changes in prices, jobs, government spending, and the world economy can change how much your money is worth it. No matter if you're experienced in investing or just beginning to manage your money, understanding these topics is crucial to help you make smart choices that protect your money. Now, let's learn about the 8 most influential national and economic issues that could affect personal finance. Issue number 1. Inflation. Inflation is the rate at which the general level of prices for goods and services is rising, and subsequently, purchasing power is falling. It's measured by various indexes, including the Consumer Price Index, CPI. The Consumer Price Index tracks the price changes of items such as food, housing, clothing, transportation, and medical care that people commonly purchase, reflecting cost of living adjustments. It's also used by governments and businesses to guide decisions on interest rates, wages, and benefits that affect economic policies and personal finances. As inflation rises, every dollar you earn buys a smaller percentage of a good or service. To deal with inflation, think about putting your money into things that grow in value or protect against inflation, like real estate or certain stocks. Issue number 2. Interest rates. Interest rates shape economic health, with low rates boosting borrowing and growth, and high rates encouraging savings and stabilizing economies. Central banks manage these rates to control inflation and influence investment decisions. Additionally, interest rates determine a nation's currency appeal and can drive up asset prices as investors seek lucrative returns. When interest rates rise, loans become more expensive and saving becomes more attractive. Conversely, when they drop, borrowing is encouraged. To navigate these changes, putting your money into different kinds of investments can help you earn more and risk less. Changing your loan to one with lower interest rates can save you money. It's best to get advice from a financial expert to make sure these strategies work for you. Issue number 3. Employment rates. The employment rate, a key economic indicator, is the ratio of employed individuals, both full-time and part-time, to the total working age population, typically aged 15 to 64. It reflects the percentage of the workforce that is employed, with higher rates indicating a stronger economy. However, as it only quantifies jobs and not their quality, it should be considered alongside other economic indicators for a holistic view of economic health. Job stability contributes significantly to personal financial security, so focus on upskilling and networking to enhance your career prospects. Upskilling, the process of learning new and relevant skills for a changing job market, combined with networking to build professional or social contacts, is a career strategy that increases job stability and value to employers. In summary, job stability, upskilling, and networking are interconnected facets of your career that significantly influence your financial security and future prospects. Issue number 4. Housing market. The value of a home is a big part of an individual's overall wealth. When home prices increase, homeowners often feel more financially secure because their property is worth more. This feeling of increased wealth can make them more willing to spend money, which can boost the economy. On the other hand, the housing market can also affect how much people pay on their mortgages. Mortgage rates can go up or down based on how the housing market is doing. If rates go up, people have to pay more each month for their mortgage, which can take a larger portion out of their budget. This means they might have less money to spend on other things or to save for the future. So, changes in the housing market can really influence how people manage their money and plan for their financial future. It's like a domino effect. What happens in the housing market can cause changes that ripple through a person's entire financial life. Issue number 5. Stock market volatility. Stock market volatility refers to the frequency and magnitude of price movements in the stock market. Factors like economic news, earnings reports, and geopolitical events can cause fluctuations. It can cause the value of investments to fluctuate, with high volatility often leading to larger price swings, potentially resulting in higher returns but also greater risk of losses. Volatility can create investment opportunities, such as buying stocks at lower prices during a market downturn, and can affect the value of your retirement portfolio if you're invested in the stock market. It's important to have a diversified portfolio and a long-term plan to weather market volatility. Additionally, market volatility can lead to stress and anxiety about money, impacting financial decision-making. Remember, while market volatility can significantly impact personal finance, it's just one of many factors to consider. Issue number 6. Tax policies. Tax policies are the rules about how much tax everyone has to pay. They affect your money in many ways, like how much you take home after taxes and what kind of savings or investments you might choose. Tax policies can impact retirement planning, as the structure of taxes on retirement accounts can influence how much you save for retirement and in what type of account. If you run a business, they can affect how you plan and invest your money. Taxes also play a big part in the country's economy, which can change job numbers and salaries. Plus, they can shape your financial future, from the profits you keep after selling investments to the wealth you pass on to your heirs. It's really important to understand these tax rules to make good money decisions for now and the future. Issue number 7. Government spending. When the government spends money on things like public projects and its operations, it can change how much money people have. When the government spends more money, it might have to raise taxes, which means people have less money to use or save. Also, if the spending makes people buy more things and prices start to go up, the bank might make it cost more to borrow money to try and slow things down. On the other hand, when the government puts money into things like roads, schools, and hospitals, it can make the economy better, create more jobs, and increase people's pay. This is good for personal money matters. Also, when the government gives money for retirement, helps people who don't have jobs, and pays for health care, it helps people manage their money better and feel more secure. That's why it's really important to keep up with what the government is doing with its money, because it can change a lot about how people manage their money and can have lasting effects on how well they live. Issue number 8. Global economic trends. These changes can cause the value of money in different currencies to rise or fall, affecting your financial assets and investments. It's important to understand these trends, as they can influence your economic decisions and financial planning. If the economy goes up or down, it can change how much your money is worth, especially if you have money in different countries. These big changes can also give you new ways to make money by investing in different things, or they can change how much your current investments are worth. The number of jobs and how much they pay can change too, depending on how the economy is doing. This can affect your job security and your income. Also, the state of the economy can influence how much you'll have for retirement and the cost of living at that time. Staying informed about financial trends is key to making wise decisions that protect your money and ensure a stable future. In summary, staying informed about economic issues and consulting with financial advisors can help ensure your financial decisions align with your life goals. Remember, personal finance management is not just about making money, but also about protecting and growing it in a way that matches what you want in life. Thank you for watching. If you found this video helpful, please give us a thumbs up, subscribe, and share your thoughts in the comments below. Until next time, keep your finances in check.